Hello guys, and glad to have you on board again today. Just wanted to make kind of a quick intraday update because I skipped onto this weekend's regular weekly update, but basically there wasn't that much to talk about. So it's more about kind of making a quicker update today to come up for what's been missed throughout the weekend. Even though there is not that much to talk about, the context are pretty much the same as the one we dealt with just 1 week ago. So that's the reason why I skipped onto weekly updates. Swing timeframes are just still locked because of squeezed volatility limitations on the daily chart. We're still having squeezed patterns out there. Absolutely not enough breath into the market. But of course, we cannot anticipate anything too bearish because I still suspect that at some point some harsh and violent pullback probably toward 3,500 which seems to be a bare minimum, not even to mention the probability of even going slightly lower than that, but still having some second thoughts with this one. So it's more about how long these things can last, and just like we stated previously, it's more about sentiment-driven type of market behavior rather than anything else. So as long as we do have, on a day-to-day basis, short sellers among the DOM community, well, that's exactly what we have. I mean, basically, the smart money is still fairly hesitating. There is still some room to the upside to kind of lift up the sentiment, just like lifting up prices a little bit. Just like in the same time, the dumb money is just going totally on the opposite direction of what the market does. When the market goes down, they're buying. When the market goes up, they're selling. And they're still navigating into shadow territory, just oscillating one day after another and just being totally wrong-footed by the market when they do something. And there's just one way we could tell it. It's just the market does the opposite of these guys, and that's what we've talked about on the 1st of January. They're still having a net bearish exposition, which also explains why our market isn't going flat, but it's going flat up. The context we deal with are still the same ones. We're trying to navigate on short-term sighted visions. Don't go anywhere further than 1 hour chart time frame and trying to look for opportunities. The reversal opportunity is still being limited to most experienced traders and expert traders. Just skip it if you are intermediate or beginner. On the opposite hand, don't trade the third range boundary. As you can see, they all get fucked up. So it isn't the type of trade in which beginners can third range boundary trade. So wait for us to find a proper reversal, and I'll let you know when you'll be able to restore trading third range boundary. So forget about H1 time frame third range boundary. Just simply not enough volatility on the high time frame. So we're basically, yes, drying out of liquidity on this 45-degree angle, a boring upside movement. It's not a trend. It's not a trending movement. It's just it's some kind of a mixed range and trending behavior. So kind of halfway through both. That doesn't mean we can't work out the shorter time frame. I feel like 3-minute and 15-minute are definitely the time frames to prevail at the current given time. So really intraday perspective, go easy and go dumb, and don't trade against the H1 time frame, which means when we get above him, just don't buy. When we get into the support context, don't sell. Just try to do the opposite. Look for any 15-minute supportive signal. Look for 15-minute any reverse signal if you know how to navigate these. That's pretty much all about it for the stock market. The major market for 2021 on my personal behavior still is the WTI. This guy is getting pretty boring. I think it's matured enough to go to the downside. That's the reason why I'm still expecting some downside potential in stocks. But that doesn't mean they have to occur right now. As you can see, we still have fairly supportive moving averages and stuff like that on the H1 time frame. So a range could still go on into this area for a little while. The trades I have ongoing right now on WTI are 4-hour and daily reference charts, still meaning that a lot of time can pass until we actually find the strength to look for the support context. So we could do straight line, kind of a catalyzed move, lots of emotion, bearishness and stuff like that. And of course, the retail traders would definitely go against that and just buy the dip. So we need to be patient. I think we'll sooner or later manage our way back to the support to the 4-hour support context, but we could just keep on riding that shit for much longer than you will be patient enough to succeed. So it's really more about that. Don't be dumb enough to try going against something that goes like that, because that simply tells you one thing: there's not enough volatility for you to work properly. So forget about third range boundary, let the professionals handle the reverse, be patient, and there's so much more opportunities out there. WTI, not to mention, is one, but yeah, this one is showing kind of signs of reverse, but it feels like there is a huge correlation between the two, but I feel like this one is much more favorable. Gold is still hard to manage. I'm still buying this one, but willing for strength, which the market doesn't show me. So I'm totally aware that there are probabilities in which we can go lower. That's the reason why, if it happens, I'm going to stop the trades and catch up later. But right now, I'm still supporting this market really slowly, but still following my personal plans and biases. All right, the rest is pretty boring. We could talk about individual stocks. Of course, there's a lot to talk about. This is really where the shit is happening right now. But we don't have time, and we don't do that into those daily updates. But we could talk about Bitcoins in general. I think this is where things could start to be interesting this week. So remember that we have a mature range on the H1 time frame reference. Okay, so trend channel in here has got to a mature point in which fourth range boundary didn't trigger a trend behavior. It's more like we tried, but we found a bottom without signal. So there's nothing for us to go trend follow. So all of those who think we're going to break 40K, I sincerely doubt it. That simply isn't what I see in front of me. Instead is definitely something that looks a lot more like a mature range that will extend to the higher time frame. So my speculative areas remains the third range boundary on H1 time frame as a reference to look for bearish trade if we get to trade this area again. So I would say the 40K is surely going to be a hell of a resistance if we get back there, just like I told you about this area for more mature and experienced traders as a reference support. So 34K being the in-between area, and I stand for what I said. I think we're going to spend quite some time out there because planets simply do not align elsewhere. I think supports can show up into this 27K area, just like you see this as being the moving average. I think these potential supports may not show up until at least early February, not to say eventually longer than that. So it feels like we're going to have to spend some fucking time across 35K, which is, of course, fairly much more limiting our trading potential. So in that perspective, when time feels like a shitty variable, I always recommend you to go easy. Okay, we've got a mature range, but if you absolutely want to do something, meaning that H1 time frame is now mature, which means we're likely going to build a 4-hour range, but we don't know for sure. So that means we can still trade 15-minute and 3-minute shots, and I think these are the reference time frame to trade on right now if you want to trade Bitcoins. So I would say use these major guidelines, try to buy into areas in which risk-reward ratios are interesting, and if we get there, try to sell. And as long as we stand in between, dumb zone, do not fucking trade. Okay, so as prices reach out 34K, there's nothing you can do. Okay, 34K, remember that's the mindset limit for you. You never sell below, you never buy above. Okay, make it easy. But that doesn't mean you cannot support risk-reward ratio area. Basically, being into this blue area is an area in which you can find some interest into supporting prices, but don't be greedy. Profit take anytime you reach out the dumb zone area. All right, so that will be my personal plan. I'm still questioning whether or not I should place these downside anchor points to this one instead, but as you can see, they're still highlighting pretty much the same area. So considering it that way, you can't buy 4-hour unless there is a 4-hour signal, and there will not be. But the thing is, very likely going to look for short-term signals like 15-minute signals, and luckily into this blue area to find some potential supports. So we do have one in here, ranging signal. This is definitely what I look to. We do have a confirming overload signal, which is fine. So I would say today, buying Bitcoin at the current prices might not necessarily be a bad choice, targeting the 34K area within today, tomorrow, eventually 2 days. It is the kind of trade in which you must be really patient. You're most likely trading risk-reward ratios rather than momentum. And think about it, okay? So forget about the news flow. This is bullshit. News flow in a range, no one cares. Forget about the momentum. Momentum in a range, no one cares but the dumb money. So do not momentum trade. Do not Follow the consensus. Do not listen to the news flow. Just trade your fucking risk-reward ratios. If you end up being proven wrong, you'll take a stop loss. End of story. You still have profitable strategy on 100 trades like these. Okay, so that being said, that's all I have for you guys. So I'm gonna still stick with it. So enjoy your trades. Trade safe. Trade short-term. Trade short-sighted. Don't try to build bigger plan. That's definitely not the appropriate time for it. Bye, guys.